You are Bhat, MD of Dalton Capital Advisors. He's joining us right now on the show. Mr. Bhat, thanks very much for taking out the time. Slew of measures announced by the government. You know, the question that everyone's been asking is still, is it enough? And will you see any meaningful, translation of that into real numbers?
Well, the market has voted on that already today. So I think the slew of measures are a good sign. At least the government is interested in addressing the issues. But I think clearly the market feels that it is not enough. But I think we really don't have to have a one-to-one correlation with what the market does and what the government does. Because I think these are influenced quite significantly on account of international events. Like, say, for example, the temperature on the trade war has increased. The Iran issue is continuing to fester. Then we have North Korea making some noises again. So all these things are issues that need to be, and of course the US President and Fed are on a collision course. So all these things have influence on the risk appetite of investors, global investors. And as you have been seeing, they have been getting out of the market despite what the government has been doing for some time now. So therefore we can't blame only the government for this. But I think even international investors are concerned about risk. And so therefore India is part of the emerging market group, which is considered risky.
But before the announcement of withdrawal of the FPI surcharge, aside from the fact that you were dealing with the global uncertainties, you had your own internal issues to deal with. Now that the internal issues have been taken care of, does it cap the downside at least? You may not see a meaningful upside. It'll still take some time to come. You need to see earnings picking up. You need to have a more quiet, stable, global platform. But does it mean that the downsides get capped?
To the extent people were really sort of concerned about the domestic event, yes, it would probably cap the downside. But I think there are other issues at play here. So, but for domestic investors, I think which are bigger because FIIs have been getting out. So that is the more important thing than because the domestic institutions have been voting with the feet. They have been supporting the market no end. But so therefore that is not really a concern. They have been investing. And so therefore what the government has announced might influence domestic investors, but may not be so much international investors, except for that small tax event as far as FII is concerned.
All right. So about $3 billion removed from the markets by the FPIs. I don't think it was such a large number the last time we took a shock like this, I think when we fell about 15% in the month of October. We've fallen about 1,000 points, 1,100 points from the record highs. Does that give you some confidence that the fall has been just about 8% even after such a heavy outflow?
Well, it is all because of the inflows into domestic mutual funds and insurance companies and the like. So they have been supporting. In fact, if you really see domestic institution investment minus FII, it is still positive. So therefore, that is why it is really not falling as much. But if, say, for example, domestic investors also take a view that the markets are not exactly very well valued, we may be able to get at lower valuations, and they don't participate in buying, then I think market can give an effect. The last time this happened, I think the domestic investors are not supporting as much. So I think that is what really is consequential.
Keeping the balance,
yeah.
Mr. Bhat, the question is, all of this which has happened, the announcements by the government, etc., are these good booster shots, but leave it at that, or can they materially change the sentiment around the buyers, whatever little buyers they might be right now?
Well, I think it materially changes sentiment for the domestic investors, but may not be with the international investors. But for them, first of all, they have to take a view that it is worth investing in emerging markets. Then in India, then they will talk about stocks. So therefore, I mean, it has addressed a third sort of issue, but the first two issues still remain. So therefore, if money is not being allocated to emerging markets and India, so it doesn't matter what you do in India.
Okay. What about domestic investors now? 2 or 3. I mean, for example, how are you going out buying right now? Are you going down and buying the beaten down names because valuations are in favor, or are you still sticking to the tried and tested even if the valuations are expensive?
Well, I think in markets like this where valuation is not exactly on your side, at least on the macro, the index sort of valuation. So I think it's always better to be invested in the leading names which are corrected. because they might actually bounce back faster if there is an economic turnaround than the beaten down stocks, because most of the ones that are beaten down have been beaten down with good reason.
What about names which haven't corrected? I mean, I'm seeing the last few days, the markets are giving favor to, say, for example, those expensive insurance companies, one or two AMC names. The HDFC Kotaks are still leading the charts as well. Is that pocket out of the investment grade right now because of the valuations?
No, valuation is, of course, I mean, the market is completely polarized. The good companies are quoting at very high valuations. The bad companies have been beaten down very badly. So I think this polarization will continue for some time till you really see the economic upturn and potential for the beaten down stocks to come up. So that is really not exactly on the horizon as of now. So therefore, people continue to go into the marquee names and hide there, as it were.
Do you feel, one needs to look at, and not just on the back of, the announcements that have been made, but do you view retail as a pocket to be a value creator alongside with some of the others like, metals and mining as a space, which has not seen an uptick since quite some time now. So it is a laggard of sorts in that sense. Real estate and what the expectations are in terms of what the FM will announce. Do you see all of these having any sort of interest in terms of allocation?
I don't think they are the favorite sort of sectors for investors.
Still with financials?
Still with financials. I mean, because there also the polarization is complete.
Yeah.
The good ones are really valued very expensive, but still there is interest there. But the bad ones have negative news coming every day. So therefore, I don't think anybody is really falling over each other to buy those names. So I think that polarization you can see across sectors, whether it is, say, for example, financial services, even for that matter, autos, industrials, everywhere it is there. So therefore, I think it is much better to be.
You think autos are turning the page?
If you're a medium-term investor, if you've got a 2-year view, I think these are good values to invest in the best names in autos. Okay. Because I think the problem there is episodic, because basically it is BS6, it is because of these bunched up insurance premia, it is because of NBFC crisis. All these will get solved in a matter of a quarter or two. And I think thereafter you will see, I mean, it is not as if, as I'm fond of saying, it is not as if public transport system has improved so dramatically in India that personal transport is not required. So the demand continues. It is just that the finance is not probably available now as it was available earlier. So when things come back to shape, I think they will do well.
Well, RBL Bank is in the green today, and that's a respite for somebody who's invested there, 324, 3.5% higher in the session. There's also some gains to the Sun Pharma Group, Sun Pharma and Sun Pharma Advanced Research. But, the kind of move that we've seen in an RBL Bank, Mr. Bhat, or for that matter, the cracks that we saw in a DCB, Federal Bank after the results, some small thing gone wrong, and a few quarters of gains given away in a single day, etc. Would these make these names a bit uninvestable right now, or would you be open to looking at some of these on a merit basis?
Well, I'm not talking about specific stocks, but
sure,
quite a few of these stocks, such stocks as you were mentioning, they were sort of, as they say, priced to sainthood. So therefore, wow. When they are seen to be no longer saints, I think then all bets are off. I mean, that's why you see them halving and stuff like that. So I mean, this is how it works. So once you are at that level, at that exalted level, I think small mistakes count hell of a lot. So, but it takes a long time to get to that sainthood, and once you are in sainthood, you have to behave very well.
Yeah, but since that hasn't happened, and now the valuations are not at sainthood levels, but have come off, are they worth looking at, or would you still prefer looking at the saints?
But I think the issues that have come up, because once it is at sainthood, you think that the corporate governance is the best, and all that is disclosed is absolutely perfect. They don't have anything that is sort of hidden, and once you come to realize that it may not be true, then I think the whole game is out. So therefore, I think it takes some time for them to get back into sainthood.
What happens, with regards to taking a slightly more defensive bet right now, considering that you anyways anticipate growth and the other variables that work in favor of high beta moving up to come in a few quarters down the line. So instead of sitting on cash, is it prudent to deploy in defensive, so you won't take such a short call?
If you have to be in equities, I think defensive is the way to play. But you can be defensive without being in equities. But if you have to be in equities, I think defensive is the way to play, because there is no point. I don't think the market rewards great adventure today.
So IT, pharma, FMCG,
at best neutral.
No. What I mean to say is IT on your list of investments?
Well, I think this is one sector where you have to be neutral, because that's a very important part of the index. But otherwise, if you really see there are structural changes taking place, I think there's still a mismatch between the growth momentum and valuation. So therefore, I think IT will have an extended period of time correction, if not a sudden price correction.
On that note, Mr. Bhat, take a moment to thank you for joining us today and
Pleasure.
giving us your perspective. Appreciate your time.
My pleasure. Thank you.